Hi everyone, Adam here, Chief Market Analyst. So kicking off by looking at the economic calendar for this coming week. Please note, not much activity on Monday. And of course, Thursday and Friday are really going to be Thanksgiving weekend for the US. And so not expecting too much volatility, or at least reduced volatility in the markets, which is kind of funny considering how much volatility is actually going on at the moment. The other stuff of interest, I think, will be the GDP for the US coming out. Will it be on track, on target, or will there be some surprises? And that is pretty much it. I'll take note of the FOMC stuff, but not really expecting too much of this. And you can see a lot of it is predominantly going to be US-based news. I think also on Friday, there'll be Euro CPI data. So it'll be interesting to see how the market reacts to that. Having a look at the charts, dollar, let's have a look at the VIX. So first of all, the key thing really to take away from this, looking here at the weekly on the top right and monthly, is that we're sitting at very low volatility settings. In terms of just general market volatility, that is a good sign at this point in time. Shows that the markets are relatively calm and happy, and potentially this is also being added to by the fact that we're approaching Christmas and a bit of a holiday period, and we're likely to see volatility kick off in the new year, or pick up at least a little bit there. So then moving on to the dollar index, and one of the things I want to highlight here, looking at it from the monthly here, you can see that we've started to break, or at least attempt to break out of the range. We still have one more week, and we'll see if it ultimately closes outside that range. When we look at it from a weekly perspective, you can see that the dollar index here has had a relatively good run without any real pullbacks. You can see in previous moves, or at least similarly long moves, we could see that the price didn't really do as long a run and did subsequently stayed within the range. So we're going to see what happens here. It could very well be the case that the dollar has decided to ultimately break outside of the range. That is a possibility here. And let's have a look at it from a daily perspective. So what I'm looking at here on the daily, closing on Friday, a little bit of a wick that shows a little bit of exhaustion there, but the MACD itself is still relatively bullish, so no signs of weakness from that. So there's a couple of different ways this could play out this week. We could see a bit of a pullback, another attempt and another rejection, and then some bearish divergence would then imply that we're going to see a bit of a pullback into the range. That isn't necessarily the case. On the other hand, should the market just ignore this wick and continue to push up, I think it's very likely that we're starting to see that dollar index break up outside of the range. Another thing that I would point out here is that we often hear about how the dollar is losing its value. So one of the things we need to be aware of is historically, especially the dollar index here, we can actually see that the dollar is strengthening against other currencies in the basket. But something else we want to be aware of is, of course, that all currencies lose value. So the point when often people say that the dollar is losing value is to say that you don't get as much with your dollar today as you used to, say, for example, 50 or 60 or 100 years ago. That is the case for every single currency in the world. So it is not unique to the US dollar. Okay, so what we're really looking at here is the fact that the dollar itself appears to be strengthening against other currencies. So relatively speaking, it's more accurate to say the dollar is actually strengthening. Right, now let's move across and have a look at the euro dollar. So euro dollar also here attempting, especially on the weekly, it's a little bit more obvious, to break outside the range. A lot more action with it here. You can just see sort of steady kind of movements down towards the bottom. This one, the angular momentum is a lot more aggressive. It really is almost falling out of that. Doesn't mean, of course, that we won't necessarily have a bit of a correction. When you look at it here on the daily, it really does look pretty much overextended. To me, we've got a bit of that wick off there, so the market try to close above that 1.04 level. We are due for a little bit of a correction, but again, that momentum is still bearish. So what we could see again this week, it'll be the inverse of what I spoke about with that dollar index, largely speaking. We could see a bit of a retracement up here, maybe another attempt, another rejection, then we would get some bullish divergence and potentially come back into the range. Or alternatively, it is as simple as the dollar has now broken outside, the euro dollar has broken outside of its range, and we're going to continue to see it weaken here. Just that this is such a major level, and historically you can see that there's actually a level of support where we are now. Let me just mark that here, and that's why I kind of say that this is really that last line of it. It has started to leak outside of the range, and of course, yes, we could see that dollar continue to strengthen. That could be that would be the theme, I think, of today's let's call it episode, is explaining why so many things are different about the markets today and what we could potentially be seeing in our future. Okay, so having a look here at sterling. Sterling here, of course, still within an uptrend on that monthly period. Still kind of touching on that upward sloping trend line. We'd have to see if there's a little bit of a bounce back from that, but a very strong trend to the downside. Again, driven at this point largely by that dollar. Let's have a look at dollar yen. Dollar yen slowing down, not driven as much. We know that the Bank of Japan really would like it to not run away with the dollar. So it's very likely that we're going to see it start to stall. The weekly is showing signs of exhaustion here. At some point, I do expect a little bit of a correction down towards towards the downside. I also know that the BOJ, Bank of Japan, would love to see it below that 150 level. Dollar Swissy. So dollar Swissy to me is definitely one that should be on everyone's dance cards. We have a really nice bullish uptrend that has been coming for a while. Some of the Swissy pairs, CAD Swissy for example, and a few others are showing some really nice, potentially brand new uptrends to the upside, which could last a while. So for me, I don't think it's unreasonable that we will see dollar Swissy head up here towards 0.92. So that would provide me with lots of buying opportunities as we go. That weekly is starting to become a bit overextended, but no signs of exhaustion on the daily yet. Right, so dollar CAD. Dollar CAD again is interesting in that it is a breakout of this range that it's been in for a while. Could it be a failed breakout? Yes, but again, we'd have to see something similar. I'd have to see price come back in within 2 or 3 candles. We'll see how that is. We can see last week we had a bit of a correction to the downside. We'd have to see that continue a little bit more to the downside. Okay, so moving away from currencies, let's have a very quick look at gold. So gold showing some signs of exhaustion. We did have a bit of a correction. I spoke this week about how we might ultimately produce a bullish candle here, or if it was going to be a weekly retracement producing a bullish candle, or if it was going to be the beginning of a monthly correction. So this is what we're at. This is what is known as a hanging man. It's usually a sign of exhaustion, and actually we can see here we produced an incredibly bullish candle here. So again, these are signs to me of being in a bubble where the smallest correction results in more and more buyers jumping in. I'm kind of for fear of losing out. The real thing is, will we create new highs? This level here of resistance at 2,800 up here as well is still potentially that area where that bubble is likely to burst. If we take a quick look at the monthly for gold, the last time it was in a really big bubble in 2011, I was around at that time, and I take it from the most recent low and sort of match it over here to the most recent low here, just down towards these lows over here. You can see that we start to head towards a potential level in around about that same area of about 2.8, call it 2.850. So to me, if we are going to repeat a similar move from the previous bubble to now, we could see ourselves possibly heading up towards 2.850 before we have a bit of a burst, but we're already starting to see some signs of exhaustion stepping in here. So it's going to be interesting to see how that ultimately plays out. Moving on to crude oil. So crude oil for me, from a monthly perspective, is still coming back down to test these levels of support, still showing more and more heavy selling from the top side, still bearish pressure. However, it's also looking a little bit bullish here on the weekly. So what I'm going to be looking for this coming week is, do we manage to pierce the downward sloping trend line, which will then negate this bearish triangle setup, or are we going to see a reversal on that and see price coming back down to test that level of support? I'm not looking to get short on this until we, definitely and confidently break that level of support. And finally, moving on to the global indices. So global indices continue. There was a very quick recovery there on the weekly, a nice strong bullish continuation candle over there. The daily over here producing a nice little inside candle bullish setup. Very nice. And we can see here we're not that overextended on the monthly. So for now, really liking the look of that for continuations. We've got the S&P as well. Same thing, pulling in, producing that bullish weekly candle, attempting to move higher. So I spoke last week about how we had this big correction. The market seems to be attempting to shake that off and keep going. So this is the outcome of the election. This is then a bit of uncertainty, and then the market trying to just stabilize itself and potentially then continue to push on. NASDAQ as well, having a bit of a bullish week. So really what I want to see this week is a continuation of that. So I just alluded to earlier in this video that there's just a general theme in the markets right now, which is kind of really pushing the limits, guys. We're breaking out of ranges on one level. We're overextended on some of these pairs. Gold is in a bit of a bubble. We've got crude oil possibly about to break down from a bearish candle that's been building up over years. And we've got the global indices that are looking like they're going to all-time highs, looking super bullish, but also, not really having had a really big correction recently. We've got Bitcoin, which I'll get onto in a moment, also completely going for the skies. So the theme across the board, and a large chunk of that driven by that dollar, but also driven by, I almost want to say, mania. There just doesn't seem to be any kind of rationale behind this. The markets are already quite hot. We're being driven largely by irrational, not rational behavior. We are in a bull market, but even bull markets need to take a bit of a breather. So during times like this, it really does pay to be very cautious. These are not normal times, and we may only be at the start of it. We might continue on for several more months. We'll see how that goes. The problem is that the longer we continue on for it, the bigger the bubble bursting is. Anyway, so here, Russell 2000, really nice, solid breakout of that range, testing that level of resistance as support. Looks very good, as though it wants to now approach these previous highs over here, close to that 2,500 level. That's really going to be the big test here. And overall, the market's looking nice and bullish. And then because we have this new asset class that's come in the last 15 years, we've got cryptos. Let's have a quick look at that. So especially when you take some perspective on it, you look at it from a monthly, we've had multiple bubbles. Don't forget, we had a Bitcoin bubble in 2017. We had another one that happened in 2019. Then the next one happened in sort of 2021, and so on and so forth. So we've had multiple bubbles over time. It's not unreasonable to think we might have another one, but you can see here really going for the stars, just completely taking off there. This is just the single biggest monthly candle we've ever had on cryptos, and that in itself is also a sign of kind of the state of the market. So just being extremely cautious over there. You can see the market starting to look for as though it wants a little bit of a retracement close to that $100,000 level. I mean, not $100,000 bigger, but just let's call it the 100,000 level. Let's just deal with round numbers. You can see we broke out of that bull flag. So this is a relatively straightforward plan, but also the market's looking quite healthy at this point in time, not showing any signs of exhaustion. Will the 100,000 level be it? Before it takes a bit of a breather, we're going to have to see. But I would really comment on the size of that monthly candle. It's absolutely huge, and that in itself is noteworthy. Let's just quickly compare that to Ethereum, for example, which still hasn't even broken past its 2024 highs, let alone its all-time highs in 21, but is looking nice and bullish. So, but Ethereum looking good, looking much more stable, likely to be able to continue to push higher, but Bitcoin is the big granddaddy. So, to wrap up, thank you very much. I would say essentially just being very cautious during these times. We are definitely in unusual and historic times with regards to the markets. It's really just the extremities being tested across all the different asset classes. And so just remember to keep calm and carry on trading. Thank you.